Good afternoon, everyone, and a very warm welcome for joining us. It's great to see such a strong community gathered for our webinar today, which is Banking on Artificial Intelligence. Across the region, AI has become the topic everyone is talking about, and banking leaders like you are very excited about its potential. Many institutions are still in the early stages of building the frameworks, the governance, and capabilities needed to truly operationalize AI. And there is a gap between the intention and implementation, which is real. And that's exactly why we are here today. We are at an inflection point. I would say the choices we make right now, from data strategy to architecture and to responsible use, we determine how effectively our banks can move from exploring AI to actually delivering impact for our customers, employees, and regulators. I'm very glad to have a panel today that I personally know very well, people who bring industry domain and a collaborative spirit to this conversation. And this section will walk us through three important themes. First, AI market trends, which shapes efficiency and customer experience. Real-world use cases across productivity, risk, and the customer experience. And the AI governance, which must anchor every step we take. To begin, my colleague, CK from Temenos, who will set the stage with his presentation, AI in Banking from Insight to Impact, which ties directly to today's goal, helping all of us move beyond the hype towards a practical, responsible, and value-driven AI adoption. With that, let's dive in. CK, over to you.
Good afternoon, and very nice to see all of you in this webinar. I am CK Loy, and the Principal Business Solutions Consultant for Analytics and AI with Temenos. I'm based out of Singapore. Nice to meet all of you. In the next 10 minutes or so, I will share some insights from a recent survey on banking and take us through some of the impacts of AI. So let us start with some insights from a survey on banking conducted recently by the Hanover Research Group. So one of the things we will be interested to know is what is AI take-up rate at this point in time? The takeaway is that it's still not too late in the game. Why do I say that? As a vendor, there is still 46% of greenfield opportunity left. 54% of banks are already on some AI initiatives. As a bank, if you're not on AI yet, there's still time to catch up because for those that started, 43% are still in the process. So I think we can conclude that this is just the beginning of the AI revolution for banks. So let us dive a little bit more into the insights. We found that there are basically only two key things that banks want in relation to AI. Number one, when banks are selecting banking software, 83% look for AI use case capabilities. Number two, when banks are selecting amongst vendors, 69% look for vendors that are AI driven. With this, I think it's clear that banks are turning to AI, but still why? We pick up three key drivers. Banks want to improve internal productivity. Bank wants to improve their customer experience. And banks want to enhance the customer support overall. In summary, banks are turning to AI to actually make life better for humans, for the bank's employees, as well as for their customers. 90% of this AI use case are all for that. With this, I am confident to make a personal stand that the future of AI is that of a job liberator. It will free us to even more value-added roles in the organization. So with these insights in mind, let's see what is Temenos AI approach. We have both an external and internal focus strategy to harness the full benefit of AI. Our product strategy focuses on embedding Gen AI to enhance how customers use our core banking solution and the related products. We have a comprehensive build of AI agents to augment decision-making across the entire bank's customer lifecycle. Lastly, we allow our banks to scale their AI with our AI Studio, empowering them to self-build AI agents. Internally, we are also harnessing AI for our operations, engineering, as well as our customer services. This may include using AI to write codes, managing incident tickets, and in some area of software development processes as well. In our embedded Gen AI offering, we are applying it to our suite of core banking solutions to bring productivity transformation to how bank will transact, launch, and manages customers. Users of this software can now run core banking aided by ChatGPT-like capabilities for queries, data insight, and user guides. In critical banking operations, Temenos agentic AI are applied to key banking workflows to make complex decisions and execute on these tasks that improve straight-through processing customer experience. It navigates complexity like how a car does it in autonomous driving or robotics AI in a production line. So lastly, for the bank to scale its AI, it needs a canvas to build its own AI agent. And Temenos will empower that with its AI Studio, providing a user-friendly, no-code interface for even business users to create AI solutions specific to their use cases. We believe that these are the three key ingredients that the bank will need to power any holistic and sustainable AI initiative. It is also important that the Gen AI is focused, and Temenos offers a banking persona-based approach that optimizes its impact. For example, a product manager, branch manager, and relationship manager have very different activities and objectives. However, all their activities can be enhanced by Gen AI once it is correctly embedded in the core. Let's look at the product manager. He may spend a considerable amount of time to draw product and customer insights from raw data and build and testing new products in Temenos Core Banking. The bulk of his workflow can now be empowered through Gen AI. For example, he no longer needs to engage data analytics team to get data and insights of his customer. Or he can design and build his own new product in the core without the need of a specialist to support him. In similar fashion, a branch manager can now easily get hold of operational data and insights directly from Gen AI to measure and report on his branch effectiveness against his KPIs. The relationship manager is now much better prepared to meet his high net worth clients with Gen AI-powered client insights, curated market intelligence, and propensity on the offerings. One of the biggest impact we had using agentic AI is in financial crime mitigation. Using AI to make decisions from complex web of data and information empowers the bank to transact more quicker, more accurately, and with less human interventions. This effectively lowers the cost of compliance and hence cost to income ratio. There are many banking use cases that Temenos has already codified, ready for agentic AI potentials. We started with common use cases like credit scoring, next best product, transaction prediction, and lifetime value, just to name a few. And we are empowering our banks to create even more AI agents through our AI Studio. The end goal is to help our bank secure competitive advantage across the entire customer lifecycle. AI-powered decision and processes bring about transformational revenue generation, customer satisfaction, as well as operational efficiencies. I'd like to end on this positive note. I'd like to thank you for your time and attention. Now I'd like to hand over to Frankie for the next segment. Thank you.
Thank you, CK, for a very clear and practical walkthrough of how AI can move from insight to the real impact in banking, which set the very strong foundation for us. And now we are building on it, and a fireside chat featuring three people I know well and enjoy working with: Michael, Alvin, and also CK. Thank you for joining me. And for audiences online, please feel free to type your questions, and we'll have the Q&A sections towards the end. So first of all, Michael, let me start with you. You spend a lot of time with banks across ASEAN, and you see where AI is accelerating and where it's still emerging. From your vantage point at AWS, where do you see the scalability and the true possibilities of AI in the financial industry? What is real today and what is on the near horizon? Michael.
Right. Thanks, Frankie, and yeah, look forward to having a great conversation today. So yes, you're saying that AI is accelerating, and probably still in the early stages of adoption in many organizations. That is true, but the acceleration is moving very, very fast. So this is very exciting times. What CK talked about was greater use of AI in the traditional business processes of financial institutions, in banks in specific as well. So there's greater adoption that is happening these days, right? Everything from, say, loan origination, service management, especially for the interfaces and interactions between a branch staff and then a customer who walks into a branch, or transacts via the digital channels, or even in the areas of fraud management. There are a lot more use cases that have emerged this year, and this is going to continue as well. What these use cases have actually allowed us to, I think, understand as an industry broadly, is that AI is going to augment the human capabilities that we have. 90% is what the number that CK was earlier talking about, in terms of being able to help accelerate innovation, improve productivity of staff, but also free up our resources so that they can focus on the innovations, but also value-adding type of activities. With greater confidence, there's also two things that have emerged in 2025. First is this ability for AI to be more and more sophisticated. You've got more sophisticated reasoning techniques, or there's ever more sophistication and capabilities in our LLM and foundational models. So that has improved tremendously in 2025. Also, the emergence of the model context protocols. These are open standards so that the AI agents that we are using can talk to each other. What this actually allows us to really consider is this future of AI agents. And if you can give me about 2 minutes to talk about this exciting future, because we at AWS and Amazon broadly are considering this to be as exciting, to be as transformative as the advent of the internet itself. We are in the cusp of this revolution, and this is going to be very exciting times. Because of the greater sophistication of these AI models, ability of this AI to be able to work together via this communication protocols that have been established, we now see a future of AI agents, or we call it agentic AI capabilities. These are agents that are super specialized and can work together to be able to understand what's happening in the environment, to be able to execute on sophisticated tasks and activities. These are not just very specific deterministic tasks, but these are tasks and activities, workflows that require judgment and reasoning and coordination. These AI agents will work in context to resolve probably the traditional areas of that was earlier mentioned, whether it is in loan origination or in fraud management, but also execute on tasks that have never been executed together with the traditional business processes before that needed a lot of human intervention. So the future is upon us. The future is AI agents that work in context to be able to work together and be able to undertake tasks that are self-determined, but are actually also directionally set by the customers and the bank staff as well. So very, very interesting times that we are upon.
Thanks, Michael. Really exciting, and is a really great perspective on how the ecosystem which you share, right, is evolving and how banks can really unlock this at scale. I will come back to you, and later on, definitely you have lots to share, and I will come back to you, and Michael. So Alvin, let's bring you in the next. As the AI scales, the conversation very quickly shifts from what's possible to what's responsible. And from your experience at Red Hat, working with highly regulated industries, how do we build trust, governance, and also resilience into the AI systems, especially as intelligence becomes more embedded in a critical mission and very essential workflows? So, Arvin, what's your view on that?
Thanks, Frankie, and good afternoon to everyone. Thanks for having me here. Um, there are a few terms I will pick up. You mentioned trust. You mentioned regulated environment. Financial services is a heavily regulated environment, and trust is an important factor just even without AI. Also taking on from Michael, where he took on AI onto a very complex journey. I think where we get pulled back on is still the same element of trust. And this is where transparency and explainability, what we call explainable AI, is extremely important to be able to decode and tackle what we call the black box problem. And this is where it's very important to be open on when and how AI is being used. Ensure AI's operations are understandable. Ability to provide justification of its outputs, the why behind the scenes. And there are multiple explainable AI techniques out in the market. They could include methods like feature importance analysis, or what is used commonly seen in the market are the two approaches. One is LIME, which is local interpretable model agnostic explanation, or SHAP, which is Shapley additive explanations. Using these kind of tools definitely helps give confidence and some degree of trust in terms of explainability. But at the same point of time, we also have to look at data, the training data. This is to ensure we take care of the bias mitigation, ensure that we prevent embedding real world biases into these algorithms by examining the training data. We also have to look at the privacy and data governance around it. Taking care of all the data which is being collected, because financial institutions collect a lot of personal data, KYC, AML, but at the same point of time carry a lot of transactional data. So there's a lot of information available, and there have to be strong controls around it. But the most important factor I see is that accountability. And at the end of the day, humans remain accountable for these outcomes, and keeping humans in loop for these for oversight, and especially for high stakes decision, is extremely important. But coming from an open source company, one of the factors we see is could help a lot would be around democratization of AI. This is about making AI tools, technologies, and especially their benefits being made available to a wider audience, because I think this realm is still largely understood. And what this does is people look at it, as I said, as a black box and are not able to decode it. And that's where a lot of the lack of trust also comes in.
Yeah, thanks, Alvin. I think you're right. I mean, highlight about that transparency, right? And in a responsible way. And I think that is very important, the responsibility by design. I think this is something that, I mean, for our industry, right, financial industry, need to operationalize. Really key and important on that. Okay, Thanks very much, Alvin. Really insightful. And let's move on. I'm building on that. Let's come back to you, CK. In your presentation, I also saw some, questions in the chat. You show how banks can move from AI, from insight to impact. And I understand impact only matters if it is tangible. So the question is, how do we ensure the intelligence actually delivers the clear business outcomes? Maybe you can share more about that.
Okay, thank you, Frankie. That's a great question, and only because from most of our customer engagement, that's the question being asked. So it's a very important question. So ensuring that AI deliver a clear business outcome really most of the time requires a very structured approach that basically connects the technology capabilities to a measurable business value. So to begin, we need to start with the business objective, right? It has to be defined. We have to define the specifics, and it has to be a measurable goal. So what do I mean by that? It has to be something like reduce churn by 10%, right? Quantified. Improve forecast accuracy by 15%. Cut costs, operational costs by $1 million, right? So align the AI initiative with the strategic priorities rather than just the technical feasibility. So some of the tactical approach that we see in some banks includes identifying the high impact use cases. So focusing on the area where AI can drive revenue, reduce costs, or improve customer experience. And using some kind of matrix between value and feasibility to prioritize the project. So I'll give you an example. So high value plus high feasibility are your low-hanging fruits, your quick wins. We need quick wins, right? Because they can help to justify to a certain level the AI investment made, right? And then for those that are strategic, they are high value and not so feasible at this point in time. So running in parallel, the quick wins can actually fuel the long-term goal of the strategic investment in AI. The other thing is KPI should be clearly defined, as I mentioned earlier. And when I say clearly defined, it has to be with an ownership, whether it's a person or a department. It has to be tied directly to the business outcome and specified time frame of achieving that business outcome. Some banks we see may employ a A/B testing approach, which is quite common, and when it is feasible, right? So you need to carve the segment and things like that. And they may do that in place of certain tests that require a long time to prove, right? So examples would be for sales, conversion rate uplift. So you want to convert a conversion from a non-AI based conversion could be less than 10%. And then you want to move it to 30%, which is entirely feasible. It's a 3-time lift. So that has to be quantified. Operations will be cycle time reduction, straight through processing, achievement of that. Customer service will be a measure of the customer satisfaction improvement. And then there is for the AI model itself, right? We need a well-defined rigor and know-how to test and track the model performances and a good feedback loop to maintain the cycle of quantitative AI model improvement. So you need to basically, as Arvin pointed out, Michael to a certain extent as well, ensure a good data foundation to track this KPI before and after the AI implementation. And that kind of necessarily bring us to the data readiness and governance, which Arvin has touched on a bit just now. So it's about data quality, availability, and data compliance, right? We need to implement a data governance framework that ensure ethical and legal use. So growth in AI has to be in tandem with the growth in the bank's data capabilities. So once AI measurements are supported by good data foundation, they're all in place, we need to build and maintain a explainability and trust So Arvin touched on that. A few framework are there to ensure transparency. And that has to be done both internally and externally. So to the regulator, internally to the business stakeholder. So to show that this good result that the AI initiative are churning out are transparent and ethical. Now, these are the key piece in ensuring that the AI initiative are sustainable. Okay? And for that, and especially so in highly regulated banking industry, the use of transparent and interpretable models versus black box is imperative. And we need to be able to communicate how AI decision impact the business process. Lastly, and equally important, in terms of culture and soft management, and by that I mean change management and adoption, we need to ensure early engagement with the stakeholders and secure their buy-in. Usually a combination of quantitative performance versus qualitative ones, such as improved user experience and so on, and maintain that engagement with training and regular updates. Thank you.
Okay, great. It's concrete and actionable. I see, what you shared. And since, CK, we are discussing on the AI application, right? And also I saw some question from the audience. They are asking about, I think it's relating to the FCM, financial crime mitigation, which you share the agentic AI use case. And could you explain more about the outlier detection? How we, employ the AI technology in handling the outlier detection. This is one of the questions from the Q&A. Yeah.
Okay, thank you. Thank you for that question. So the FCM example is a good example of where AI is being used to complement an existing process. So in an existing rule-based approach, we can suss out the transaction that requires manual review of the to comply with sanction screening. The false positive is generally quite high, and that would mean that you need more FCM employees to do that piece of work. Now, AI can come in to complement that to reduce the false positive, which was the case that we have managed to do for this particular bank, and they've gone live. And that results in what I mentioned just now, job liberation. The FCM managers who previously have to manually check the transaction to ensure that it complies with sanction screening can now go on to do other value-adding roles in FCM. And that result in a productivity gain in the sanction screening area because your straight-through processing is better now. And all this can be done with the testing that I mentioned just now to ensure it meets certain KPI. Like, for example, 100% true positive must be achieved and certain level of false positive percentage. Yeah.
Thanks,
Thank
CK. And I think you, rightly, explained to the question, to how we handle that through the AI technology for the outlier detection. Okay, now before we move to the actual Q&A, let's close with a question for all three of you, because this one I see really sits at the intersection of the technology, operating model, and also leadership. We've talked about possibilities, trust, and outcomes, right? Business outcome. And AI only thrives if the underlying architecture is modern, open, and secure. If the organization also we mentioned about needs to have the culture to embrace this continuous learning and experimentation. So maybe Michael, you start first to share about, what kind of this architecture culture needed to support AI at scale. And then with Arvin and CK, you can round us off. Yeah, first, come back to you, Michael.
Right, agriculture and architecture and culture is going to be quite an interesting convergence. From the architecture perspective, I think Arvin is right. You need to make sure that your data foundations are set up for greater and greater use of AI and agentic AI systems of the future. That means that data quality, access to the right and high quality data sources, also possible for the organization, and the ability of the organization to use that data for AI-related purposes as quickly as possible needs to be set right. So that's almost like a foundational thing that we have to get right, right? But there's also the evolving like learnings that we have had over maybe like 3 or 4 years of this in the financial services industry. What we have learned is that we should not get stuck to one particular model or one particular protocol. We need to be as open as possible for the evolution of capabilities and possibilities of all of these AI models, right? So there has to be a culture of openness to be able to change the way that we use models or change models depending on suitability, feasibility, but also practicality for the use cases that will continue to emerge. Also, from a culture perspective, we need to understand the use cases, no matter how many quadrants we use for feasibility, practicality, low-hanging fruit or not. They need to be refreshed every quarter or so, really depending on the business requirements. And we need to know that our business requirements change, and therefore the metrics by which we judge which particular use case needs to be given more importance will also change as well. So openness to change, very important to these things. One of the things that have changed also is the assignment of feasibility to the very difficult tasks we have in the banking industry, for example. It used to be that we focused on AI use cases that were like easy to undertake, right? Maybe FCM is one of them, or maybe the customer interactions and customer engagement type of strategies were really the necessary focus for 2025. But in 2026, there is this emergence of capabilities that allow us to address the long-standing issues of our industry, particularly in the modernization of this legacy architecture or legacy and monolithic technologies, these spaghetti systems that we used to talk about in the past and continue to do so. The evolution of AI capabilities have really been quite possible to transform these monolithic architectures that used to serve banking in the past towards this more open, but also ready to be digital systems of the future. So at AWS, so this week at AWS reInvent, we've been talking about AWS Transform to be able to ready the organization to undertake the long-standing issue of our industry, which is how do you transform the very legacy, monolithic type of systems and applications that are not simply ready to serve us in the future. So openness and be prepared to take on more and more difficult tasks is what is awaiting us in 2026.
Thanks, Michael, sharp and succinct. And agriculture may be really a convergence of architecture and culture as well. Very good. And so let's move on to Arvin.
See, Frankie, this is where the problem is. When you give Michael the first chance, he covers all the points. And then all I have to say is I agree with Michael. I'll just say a few things. Data, again, repeating. Financial institutions have been collecting a huge amount of data. A lot of this sits in siloed forms. So one of the biggest things we talk about is looking at the right way of getting this data aggregated. And this is where something that has worked, we've worked with a very close partner of ours, and it's worked very well, is data federation, real-time data federation. So start looking beyond, this is thinking what Michael said, start looking beyond the conventional means that you were talking about. It is going to be still very difficult to get all the data in a single source. So start looking at data federation, especially now that when you're looking beyond just structured data, you're looking at also unstructured data. So look at different angles. That would be on the data side. Also on the technology side, one of the things I would call out is like when you look at different things, start looking at experimenting. What we have seen at Red Hat, we started looking at the inference server side of things, because we said that, okay, everybody is spending a lot of time on the training side of things. And we started looking at what we call VLLMs, which are, virtual large language models. And it's a library of open source code, which is maintained by the community. Specifically, VLLM is an inference server that speeds the output of generative AI applications. And this is by making better use of GPU resources, underlying GPU resources. So again, this is another way of looking at things rather than just sticking to the traditional means, trying things out. And the last thing I would say is repeat what Michael said is openness. And this goes in a long way because people are not able to understand. If people are not able to understand what you want, support from the management, support from the stakeholders is going to be limited. Be clear in defining outcomes and use cases so that at least you are able to go back to them. Because one of the biggest challenges we've seen this year has been that a lot of these AI POCs have failed and have not gone into production. And that this has given itself a bad name that is it real, is it here to stay? I definitely think it is here to stay. If you are very clear about what the use case is, what the outcome you're expecting, we are able to explain this. I think we'll have a good stakeholder management.
Thanks, Alvin. Thanks, really insightful. And CK, what's your view then?
So, Arvin, I think I have a bigger problem than you. I think very well summed up by Arvin and Michael. I really don't have much to add, but maybe I'll touch on a few points that maybe they have already touched on. I think on the culture side, I think the buy-in part that Arvin has touched on, I think it's important to have a systematic way approach to engage the stakeholders and prove from day one that the transparency is there. So especially in the case of banking, so to prove that the model can be explained using layman language, if not by some mathematics. There's a lot of mistrust on black boxes, and it's not safe to rely on black boxes, and regulator require the bank to be able to explain this model. So the transparency, both internal and external, will help to build the culture of AI. So the other part of the culture is the fear of AI replacing jobs, right? I think what we have done with the financial crime mitigation is a good example that it does not replace the job, it enhances the job. For those FCM managers who benefited from lesser manual work, they have gone on to do more value-added role in FCM, right? So it's not a replacement, as the survey earlier on suggested. Is really to enhance the human condition, right? So the users, both customer and the bank user, will have a better life using AI to improve what they do. A very good example is ChatGPT. It has improved our life, right? When used correctly. Then the other piece on architecture, I just really want to add on to Arvin. I think he made a great point about getting it right, the data, unstructured data, structured data. And it's not a one-day silver bullet journey. If the bank has on the journey of getting the architecture, the data, golden source of truth correct, they are already halfway there in leveraging AI to all those benefits that we talk about. Yeah, thank you.
Thanks, CK. I mean, thanks, three of you, really fantastic insights. And I see, I mean, there are lots, I mean, of questions coming to our chat bot. And now I think let's look into some of those questions. And maybe first, I think, Alvin, there are two, I mean, questions relating more on the impactful AI use case in the retail banking today. And also, I mean, how banks use the AI to differentiate themselves competitively in the crowd, I mean, the market. And from an industry point of view, you have lots of experience. Could you share about, I mean, your view, what you see the most impactful AI use case in retail banking today? And how they, I mean, make use of AI to differentiate themselves.
I think Michael at the start of his presentation mentioned about it. This is around customer experience, which is based on what we used to call hyper-personalization. And this is collecting the customer's data, understanding what the customer is about, looking at the transactions, looking at their product profiles, and then making not just the right offers, but also engaging at the right time, at the right level. This has been would be the most impactful, and it also makes the customer feel that the bank understands them as an institution rather than just dumping products or just running campaigns against them. That has been the most, I would say, visible part of it. The other area where we have seen, which especially with the digital transactions happening, the volume of digital transactions going up, is the KYC and AML checking online real time. And this is extremely important as you see a lot of transactions coming through and people finding ways and means of getting around it. So this is where AI is very impactful and useful. But obviously, the it's not as visible to the customer as a hyper personalization. But I would call out these two. There are internal productivity benefits also. Where it's being used more from ensuring that the process in the middle office, especially where it's a lot of paper driven, can be sped up. That again reduces the churn time for the customers waiting for something to see actionable.
Yeah, thanks, Arvin. I have some takeaway from what you said. Really, the humanization, I'm creating some word here, seems to be a new topic. We can talk about how we can more humanize more the hyper-personalization enabled through the AI technology. I think that is also key because we are all humans, and the AI still require the human oversight, and we need to experience that and human factor. How they deliver the service is really key. So that is interesting. Okay, maybe next one really go to Michael. And there is a question from Land Bank of Philippines. Albert, thanks for that. And he mentioned he received lots of offers and proposals, talking about all different kinds of, the AI technology, voice bot, automatic credit risk analysis, risk management, chatbot. So with all this, he is trying to see the crystal ball. What is the assessment criteria, the top three industry standard for banks to consider when they look for a AI solution?
Right.
Michael?
Yeah. So I'll bridge that question together with the question previously, which was about impact, right?
Yeah.
But let's just address the impact as well, because this is a dilemma or a trilemma or a multiple dilemma of many organizations. Where do you start? If you talk about what is truly impactful, there's many use cases that will be truly impactful as well. In the various studies, even pre-AI, the most humanly impactful business process of a bank that a bank really needs to get right is in the moments of distress for a customer. And this has emerged very recently and has become more topical, especially in the area of, say, fraud management, because, financial crime, frauds, syndicates, all of these illegal agents that call us every now and then trying to take our money is becoming a very relevant use case that banks really have to take a look at. In the studies of what is truly impactful and humanly impactful, borrowing your comment there, frankly, it is in the moments of distress when a customer knows that he has probably been scammed, especially in the areas of, say, being able to replace have a replacement card if the card has been compromised, or be able to have access to funds and unblock the funds as well. And so maybe we need to focus on the humanly impactful ones that are current, and this is as current as it can get, right? And so to address Albert's question, you really have to work with all of these AI enabled companies in the spirit of trying to address the real and humanly impactful use cases that we should really try to take a look at. There will be plenty who would of organizations of all of these ISVs and application providers who will say focus on this one because we have all of these skills and discipline that have worked in the past. But it has to be in the context of what you are trying to solve. So it's not so much about how sophisticated the technology is. Of course, that has to be there too. Or it's not, in fact, about the models that they are using. I mean, the model quality will improve through time, and they have been proven to improve quite exponentially, even just this year alone. The key thing is their ability to work with you, to address the truly relevant, truly current business problems that you are trying to solve. This is the era of AI that is finally helpful to the enterprise, not just experiments, but finally helpful for the organization, for the customers that our organizations are serving. It is the ability, ultimately, of these service providers to work with you to solve the problems that you are trying to solve.
Yeah,
Frankie, can I jump in there?
sure, definitely.
I think what Michael said is absolutely right. It is what problem are you trying to address?
Mhm.
I would add a few more things to it. The second one would be is how easily can you partner with that provider? It's about partnership because that leads to execution. You can have the best product in the world. If you don't have your outcomes defined properly and you cannot work in executing, it's as good as useless. And the last thing is how easy is it for your people to learn about that offering?
Mhm.
Because then they can consume it, support it, maintain it much better.
Thanks, Alvin. I mean, can't agree more. From Michael, the relevance, and Alvin, how easy, how friendly, right? How good we can partner and solving that problem. I think this is really key when we adopting some new technology, and AI is more than a technology, in my view. And thanks, really, great insight. And let's, have CK to have more airtime. And CK, given your, the data domain, there are two questions I want to club it together. First, what are the challenges ensuring the data privacy and regulatory compliance when deploying AI? I find this is a very great question. And also, how effective? When we apply the AI in detecting the fraudulent transactions compared to traditional method. I think CK, you can share more about your experience as a solution provider. Yeah, CK.
Yeah, thank you for that question. So the first question, we always train the data on anonymized data points. There's no PII, personally identified information in the data set that is used to train the AI. On top of that, certain sensitive profile like gender, ethnicity are also removed, and in some countries, regulation requires that to be not in the model. So those will ensure that the privacy of the data, the customer data that we use to do the modeling, have the 100% of compliance. Then to the second part, how does it compare using AI against traditional way of detecting fraud, right? When you say the tradition, there are a few layers. I guess one layer would be policy, which is I would say the traditional, very traditional way. Then the next layer will be some business rule formulated by the expert in the bank, right? And then the next layer will be some level of analytics. And then, of course, now we have the AI, the machine learning. Now, scientific tests has proven time and again that there is never a time whereby the business rule can beat the AI, because AI will use as many data points to make a decision on a certain objective, right? And that is done through mathematics. And one of the traditional method could also be that you're using some machine learning, but your algorithm is archaic. So Arvind has highlighted some of this newer algorithm, right? So it's all in the algorithm. The algorithm in the banking industry has one more constraint, that it has to be transparent. So black box can churn out very good results, but it's not explainable. So the challenge is using the right algorithm. and it usually involves newer form of mathematics to be able to explain this result. And using transparent model can also uncover insights or areas that are sensitive during the development stage. So that's another plus as well. So we have proven, we have done POC, there's scientific proof to show that AI model will outperform traditional methods through various form of backtesting. Yeah, thank you.
Thanks, TK. We are really approaching the closure of our fireside chat. But before that, I really want all three speakers to give the really key takeaway for the audiences. Limit to one sentence, really one sentence. Maybe start with Michael.
Yes, so it's the constant experimentation that we really have to go for, experimentation that touches what is the problem that you are trying to solve. I also just want, if I may, I just want to address one of the questions here, asking, do you have any examples of front-running banks that have successfully implemented AI in their operations or reach an adequate level of maturity? The level of maturity that has been achieved in many of these references of Amazon and AWS are those that are moving towards agentic AI, right? These are, again, the future of AI that we really have to prepare for. These are super specialized agents that can talk to each other and act in concert to be able to fulfill not just one step, but multi-step type of workflows that resolve the long-standing issues of our time. It can be applied in mortgage processing. It can be applied in KYC, ALM, FCM, as earlier discussed. But the ability of the organization to string through all of these super specialized agents to resolve business use cases, very, very important to consider.
Okay, I add more flavor on that, Michael. If I ask you one word about the banking on AI, what word you want to give, to the audience?
Well, it's obviously revolutionary. I think this is very, very exciting. Revolutionary is my word.
Excellent. Thanks, Michael. Alvin?
I would not do a word, but I would add to what Michael mentioned. Michael mentioned experimentation. I would say two things to that: continuous learning and patience.
Very good.
Hmm.
Thanks, Alvin. CK?
My sentence would be embrace AI like how we did embrace internet, and our life will be so much better in the foreseeable future.
Excellent, excellent. Thank you. Thank you all three speakers, and also thank you all for joining us and the insightful questions. I really love the question. I want to answer all and really continue the conversation. And I think today we made one thing very clear. AI is a transformational opportunity, and only if we build the right foundations, right? The governance, the architecture, and very important, a culture ready to act. And the path from the insight or even hype, whatever, the heated debate, discussion to impact is within our reach. I strongly believe that. And I hope today's discussion really helps you to move forward with confidence and positive forward looking. And very thank you again, and have a great afternoon, everyone. Thank you.